My guess is actually, I think the PPI print and the CPI print, we do expect that they're still going to be slightly on the high side, and probably that is what your colleague was talking about. That sets the stage for the Fed to continue to tighten. I think the house view for JPMorgan is that the Fed will raise rates by 75 basis point in November, and followed by 50 basis point in December, and followed by that, I think early next year, we still see another 25 basis point of hike. So that means we still have another 150 basis point more to go. So that's it's going to be a pressure point for Asia credit for as a whole. So I think it's not so much about where's the level. I think it's also where do we see the path, where is the terminal value, and when is going to the tightening is going to end, and that's going to determine how the credit is going to perform.
So the sequencing is 75 November, December down to 50, then after that early next year to 25. Does that constitute in your mind a pivot or more of a pause?
Well, I wouldn't say that we are not really expecting that rates to cut the Fed to cut rates anytime soon. But my guess is actually from the credit investor perspective, what we want to know is when this Fed is going to start to kind of tip a plateau up. My guess is going to take time for all this rate hike to have an impact on the U.S. economy. My guess is also that the Fed will also want to take some time to observe how is the economy responding to all the Fed tightening that happened.
Soo Chong, so how challenging is dollar debt servicing at a corporate level looking, and where does this leave default risk?
Yeah. Well, I think as a whole, I would say that yes, I mean the rising rates and also weakened regional currency is a pressure point for Asia credit. But at the same time, you take a step back and look at Asia credit, we need to realize that Asia credit, 85% of Asia credit are investment grade. It's only 15% is actually high yield. There's no doubt. I think the higher rates and also inflation and also slow growth is putting a lot of fundamental pressure on the Asia credit. But the one that's actually it will have more problem will be the investment higher side. Whereas the 85% of the Asia credit, which is investment grade, I think they are much more well equipped to deal with the slowdown and also the higher rates and also the inflation number. It's just because they have much more balance sheet flexibility. They have better access to alternate funding. So from that perspective, I think we would expect that they are still going to hold quite intact. Whereas in the higher space, there's no doubt. I think that have come under a lot of pressure. Default rate had gone up to about 13% right now. We won't be surprised we could end the year closer to 15%, which is a high print for us. Probably that is still something that we deal with in the near term. But at least 85% of our market is holding quite well.